If you pray this year that this year is your year in church or in the mosques, and you say 2025 will be your year that you achieve your financial freedom, this video is for you. I actually designed this program to help you know how to make money in the stock market. If you're totally new to the stock market, this video is designed for you, and this video will take you step by step on how you can make money in the stock market. And if you're diligent, you can actually make your first 1 million, and you move to make your first 10 million, and you move to make your 50 million, 100 million, and you move to 500 million and 1 billion. It is doable if you will stick to this training. So what I want to tell you guys is, maybe you bought this course, or maybe somebody gave it to you as a gift, or maybe by chance you are able to come across this video. I want you to know that this video course is worth $1,000. So if anybody send it to you, go and appreciate that person, because after this video you will be amazed the kind of knowledge, the things you will know about stock. I condense my 5 years of experience to actually make this a simple walkthrough, so that after this class you'll be able to make cool money. So this video course is presented to you by Joseph Semitula, and I'm going to walk you through everything and show you how to actually make money in the market. So I will show you every bit and every nook and cranny. I will show you everything on the street, what you need to know about the market. And if you reach out to me, we can take it up from there and you'll be able to learn a lot. So I want to tell you congratulations. Let's move straight into the journey. So who am I? A lot of people ask this question. I know you've seen my picture and you've seen my face now. It is the same person you're saying. So I love that question. So let me give you some few answer, not in totality, but just in a few texts. From there, you can actually tell who am I and who am I becoming. You understand? So Investor Joseph is a dynamic trader, crypto educator, and a business developer dedicated to helping individuals achieve their financial freedom. Not only individual, I also help institution also. That is why you see business developer. So that is what I do. So with a thriving YouTube channel, and I also have a Telegram group. It shares insight on digital assets, stocks, and trading strategies. So all these are areas that I've built experience over the years, and these are some stuff we're going to discuss, and these are the experiences I'm bringing to actually make these years of experience in few hours. I just want to communicate them to you in few hours. So its educational initiatives include, I've done a lot of master classes, and I've done a lot of crypto classes, and I've also empowered others to navigate the financial market. And you that is listening to me, I'm also empowering you so that you can be free from the shackles of poverty, because the stock market is one of the two. There are many tools, there are many ways you can make money, but the way I have discovered is via the stock market. It depends on your approach, and after this class I want you to approach the stock market like business. So go with your business mindset, wear your business thinking cap, so that you make money in the market. A lot of people are doing it for fun. So if you are doing it for fun, you leave money on the table. But if you're doing it as a business, you want to be very, very strict, and you want to actually take profit when it is time. Guys, there is a lot of opportunities in this market. I've seen people make billions, guys. People make hundreds of millions in this market, and you will be the next that we are going to celebrate. So this is just a brief overview, or a brief summary, or a brief description of who am I. As you watch the video and as we interact going forward, you actually get some other aspect of Investor Joe. So let's move on. So who is this training for, you want to ask? So while I was designing this training, I had some few people in mind. Despite the fact that some people might not fall into this category, and they will dedicate time to watch this video and actually learn a lot and take some action as a result of this video. So this, if I should write everything, I just want to put this in a category that I'm looking at young professionals. And I'm looking at entrepreneur. So young professionals are people who are building career, maybe in data analyst, data science, web developer, different areas. And these are the people I want to look out for, because if you're making money, you want to multiply money. And one place that you can multiply the money is in the stock market. And I want to guide you guys. So also, if you're an entrepreneur, as you hustle to make money, you want to also be able to let the money work for you. Imagine you have 20 million naira in the stock market. That is 20 million employees. These guys don't complain. These employees don't complain. They don't complain about salary. They don't complain about incentive, bonus, and all that. They just work. That's what they do. And imagine how you multiply it and how you keep growing it. And I also dedicate this for students also. Maybe you're in school, you're disturbing your parents, calling them every week. The stock market is a place that with 100,000, you can be sure in a week or two, you can get 10-20%. That's 10-20,000 naira if you're in the school. And you can use that to actually build capital and also do a lot of things in your school. Pay for bills instead of disturbing your old parents. And anytime they see you, instead of them to be so happy, they will be afraid because they know you are coming with bills. You understand? And some of you're not even wise. What you do is you inflate some kind of money so that you have excess money to do whatever you want to do, not knowing that you can actually get excess funds from the stock market, which you can use to do a lot of things. And recent graduate, after you graduate, instead of begging to apply, you can save some money as you're serving. You save some money and build up your portfolio, guys. Imagine building up your portfolio and you find out that by the time you graduate, you have 10 million in your trading account. Tell me, you go and create business and employ the unemployed that is full in the market. You understand? You employ them and you reduce the unemployed graduate that we have instead of you adding to the numbers. So pay attention to all this stuff. All you need is your phone, all you need is your data, and all you need is a little cash to get started. One mistake a lot of people will make, they want to start with big money. Sometimes people ask you, how much can I start with? I always tell them you can start with as low as 5,000 naira, because I know they are looking for excuse. You think they are asking reasonable question? They are looking for excuse. They want you to mention 10 million so that they will tell you they don't have veto, and they will say that is an excuse for them not to make progress in the stock market. I don't want you to be that way. Put on your thinking cap, guys. Think the right way. Start before you are ready. That is how I got started. I never had that big junk. In fact, the first money I used in trading Nigerian stock was my sister's money, and she gave it to me in trust that I should keep for her. Then I asked, when likely are you to need this money? When will you need this money? And she said, okay, maybe 2, 3, 4 months. And I said, okay, no problem. And that was how I started investing it. I'm not saying you should do same, but I just wanted to pick the wisdom that I'm ready, like I'm hungry. Despite the fact that I was working, I still want to make more money. So young graduate, recent graduate, while in school, imagine you've been a student trading, you're now a graduate. Imagine what your portfolio will look like. And don't forget, you also be earning dividends, and these are monies that can pay a lot of bills. And also I'm looking for those that are retired. Build your portfolio. I always tell young people to avoid the pension queue. The pension queue is not the right place to be, guys. You understand? It's not the right place to be. Thank God if they treat pensioners well, but I think you should be your own pension. Like, prepare your retirement so that you have a whole lot of these things. You have good portfolios that are worth hundreds of millions, and you're getting dividends of 2, 3, 10 millions. Imagine you start early. That is what and pre-retirees, you are about to retire. You need to look for a way to put, because sometimes when you don't plan, once the money comes, they come with different wants, and before you know, the money is now maybe a few 100,000 that is left. You will now say, now you've learned your lesson, and even you know that this thing exists, this is what you should have done. Guys, learn it now before that time. Learn it now, because the future did not plan will be the future that will surprise you. So plan it very well, and that is why you're coming across this video. If you've never come across this video, you have an excuse. Yes, you have an excuse, but if you've come across this video, you don't have an excuse, because you've already heard what I'm preaching right now, so you don't have any excuse. And I'm looking at small business owners also who have a small business, and this is where they can be putting their profits in the stock market. And freelancer, so do you work on Fiverr, Upwork, you get job once in a while? You need this so that when the job is not coming, you will lose some of this profits that you are getting from trading to actually push yourself forward until the next gig will show up. So these are the people I'm looking at. And one people that I'm looking at also, I'm looking at the jobless guys. If you're jobless, that shows you can open your system, or you can check your phone from 10 a.m. when the market will open to 2:30 when the market will close, and join the US market 3:30 to 10 p.m. when the market will close. You see that you are no more jobless, you have a job, but you say you don't have money to invest. For you to be watching, that is when you have inspiration. Trade with fake money. That's how I started. I had a portfolio with Investopedia. I think they still have it, and I have like $1 million or $100,000 if I'm not mistaken, and I was able to make good profit from it, and that gives me confidence that by the time I lay hands on active accounts, I'll be able to do wonders with it. And as you know, I've made good money from it. So I just want to encourage you to join me and eat this money, so that you can stop sending text message for urgent 2k, and stop disturbing your uncles, stop disturbing your neighbors, your friends, and all that, so that you can be self-sufficient. That is why the market is designed for you. So how to invest in stocks for beginners. This is a step-by-step process. This training is presented to you by Investor Joseph. Yeah, that's me. So let's move. Happy New Year, friends. I want to wish you success, and I want to wish you great financial freedom. And those of you who desire to quit your 9 to 5, this year will be the year that you quit your 9 to 5. And what will make all this prayer come to pass is how you actually take this training serious. I want you to take it serious. I want you to actually achieve your goal. All this prayer I've prayed for you, I want it to come to fruition, and that is why I designed this course, so that you can be a part of it. So guys, congratulations, you made it to the new year. Happy New Year, friends. So let's go. Why invest in the stock market? Why do you invest? So one of the best tools in human history that have produced wealth, is it Warren Buffett? Is it George Soros? Name them. They've made good money from the market. Good money, guys. You know, sometimes people tell you to buy land, real estate. I'm not saying those stuff are not good. They are nice, they are perfect. But look at Warren Buffett today. He didn't have any business, so to speak, like a physical business like that. But all he does is what? Stock trading. And guys, it's enough. It's enough. I understand when you make good money. I do also. When you make good money, you key it into real estate. Fantastic. Fantastic. But do you know that that money that is generating more money for you, some people would have used it to go and do a business they don't understand, and everything will come to zero. I know you are thinking, but the stock market can come down. That is why you're doing training. You don't go to stuff without having skills. You don't use magic. You understand? It's not luck. You have to get the training first, then luck will smile on you. So it is the best tools in human history. I just mentioned names that have been able to make money, and maybe your name will be the next one I will mention, because all of us doing this will make money, and you that is listening will also make money. In human history also, the S&P 500, which is the market, this S&P 500 track the 5 most capitalized stock in the US, and so far they've had 10% return every year. 10% return every year. I also do a training. If you have the chance to check my YouTube channel, The Financial Edge, I'll do a 3-step process on how you can actually quit your 9 to 5 using this 10% annual return. So it's compounding. So it's compounding. You compound it 10% every year, and you have certain money you put. Is good for those in their career. Maybe 9 to 5 is good, so you use it to build wealth without stressing. Because while I was building I must tell you the truth, which is another video I will do in my YouTube channel is to show you guys how you can become brutally guys, you don't understand. You will be doing saving 50% of your salary for 1 year. You'll be thin and lean for 1 year, and you'll be rich. That is a sacrifice. 1 year sacrifice for your wealth. And after that 1 year, because by the time you're saving 50% of your salary, if you save 50% of your salary for a year, you don't need to work 6 months next year. That's the calculation. If you save half of your salary for 2 years, you don't need to work the third year. So by the time you get that set in stock market, which will be growing every day because you have that knowledge now, you'll be building it, you make profit, you sell, you make profit, you sell. Before you know, you've built your capital to a level. So you can take from it. If you're interested in real estate, you key in. There are a lot of things you can also key in. FGN savings bond, you can also invest in that also. And you can also invest in commercial papers. A lot of things, guys. And I bet you, after this course, if you reach out to me or you get into YouTube and you search for the Financial Edge by Investor Joe, you'll be able to see some of these videos that I will be doing. I just want to do this so that you know what is going on. So savers are losers. Guys, savers are losers. Imagine those saving currently when the Nigerian inflation rate is 34%. Imagine. So as you are saving, your money is losing value. So therefore, why will you be saving? Savers are losers, guys. Instead, be investing. So that money that you put in bank every month or every week or every quarterly, that money should be able to give you good money. So instead of you dumping it in the bank, go and open a trading account, and you can reach out to me. I can assist you in doing that so that you can be putting that money monthly into your brokerage account, so that you can use it to trade, and so that you can use it to make more money. So when you make profit, that is when you can now take some and say you want to go and touch grass. You know, if you're in the crypto space, you understand what I meant by touching grass. You know, you want to go and enjoy yourself and reward the body that actually make the money. So asset is cash. That is the key. You are losing purchasing power by not investing. So you should be investing so that you will not lose your purchasing power. And the third point I want to give you guys is never been cheap to invest like never before, guys. It is so cheap. Unlike those days when you want to open GT Bank, I don't know if you still remember, if you want to open Zenith account, you need a minimum of 50,000 naira, guys, until GT came with zero balance and they changed the game. I think right now, any account you want to open in Nigeria, it will be zero balance. I don't know about that of US, but I think in US also, they are running same. So imagine how the trade is right now. Those days you have to call, you have to queue to submit order, you know, a lot of things like that. But right now, just your phone. You only need your phone, and with your phone you are good to go. Just your phone, you are good to go. All you need to do, once you've registered, you send you your login details, you log in your phone, you deposit there, you trade, you take profit there, you withdraw, and you go and flex, guys. And you enjoy life instead of managing life, while you have money that can give you the money you need to actually enjoy all through your days on earth. And you're there spending it on something else, making something simple to be difficult. So it's very easy. No stress. The barrier is so low. Trading fee is also low, and compared to those days. And the next point is, you don't need to be a genius, guys. That's why I told you what I'm sharing with you is years of experience. Over half a decade of experience is what I'm teaching you in few minutes. Guys. So why can't you dedicate this little time to actually make your life interesting? Because you know how to invest. You don't need to be a genius. You don't. There are strategies that help you grow your wealth over time, and I will show you guys. Very simple. You buy low, you say high. Shikina. You don't need to stress yourself. You buy low and you say high. That is a simple fact. That is it. So some people try to make it difficult. They say, do you need to do this? I don't know how to do. I don't know how to. Guys, you don't need all that. You don't need it. You don't need it. That is why I created a community for those who are so busy. I just tell you there, buy, you buy. I tell you there, sell, you sell. Very simple. And thank God for the brokers we have now. They send you recommendations. They send you recommendations. So you don't have to be a genius. You just need to know how to do the right thing at the right time. So that is what you need to do, guys. So, guys, I hope I've been able to communicate. I've been able to let you know that savers are losers. And I'll also let you know that it is so cheap. There is low barrier to entry for you to start trading. And also, you don't need to be a genius. In case somebody told you that you need to have a certificate, you need to do this, you need to have social amount, guys, those things are pure lies. It is so easy. So don't complicate it. Now, what is a stock? What is a stock? So a stock is a share of ownership in a company. Let's say, for example, a friend wants to start a company and he is growing the company, but he realized that the company is too big for him and therefore he needed some assistance. So now he can come to you to borrow money from you, but you look at it that you might say you don't want to borrow. So what it does is, I want to expand my business. So what I will do is, give me this money, then I'll give you a stake from this company. So as I'm growing, after the whole year, we'll settle down and check the profit. Then I'll look at the percentage of the shares that I've given you, of the ownership I've given, maybe it's 2-3%. Then I'll take that from the profit and give to you. That is how it is. So think of a share as being a slice of pizza. You understand? So buying shares give you equity, so aka ownership in a company. So when we are looking at pizza, for example, that is a company. So if you are taking a part of it, that is your equity. You are taking a share, that you are taking ownership, a part ownership, because those that have the other part have control, but you are just taking a part of it. So by the time you are not paying dividends, so what you own or what you've taken, or the part that belongs to you, will equal the kind of dividends you get. So it will equal the kinds of dividends you get. So that is what you want to pay attention to for you to know what is stock. So stock is a share of ownership in a company. So when a company is doing IPO, which is initial public offering, they can come with 20 billion shares, 10 billion shares. Mention the amount. Then that is where they actually give other stake for those who want to invest in the business. So I hope you're getting my point, and I hope you understand what I just explained. So this question can be phrased, what is a company? Because the stock, the shares you see represent companies. So you see Dangote shares, for example, it represents Dangote company. So if you have 100,000 units, if you quantify that based on the unit that is available, you know the percentage of ownership that you have in the company. Same thing with Apple. If you have a certain percentage of Apple, that will give you access. If they are sharing dividends, you get that same percentage of the shares. So that is the stock for you. So when somebody asks you what is a stock, you say a stock is a share of ownership in a company. So that is what represents the company in the stock exchange, be it Nigerian Stock Exchange or the New York Stock Exchange. Now, this is the example of what I just explained. So the share outstanding, for example, for Microsoft is 7.5 billion. So 7.5 billion is the share outstanding. So the share price is 420.70. I'm just giving an example. So for you to know the market capitalization, you have to multiply the share outstanding multiplied by the price. So if you want to do that, we'll be doing 7.5 billion multiplied by 420.70 cents, which gives us 3.175 trillion. So Microsoft is a $1 trillion company. So companies are typically measured by their market cap. So when you ask for the market cap of a company, this is how you get it. You multiply the share price with the shares outstanding. So the next one is companies are typically measured by their market cap. So it is the market cap you use to know large, medium, small, and micro companies like that. So you use the market cap to measure the size of the company. So market cap changes over time because the prices increases and decrease also, because price outstanding can change over time. We are just explaining that it increases and decreases. So buying and selling a company stocks drives the price upward or downward. So it is that pressure of buying and demand, because it is the market. We can call it karakata, buying and selling. So buying and selling gives you that insight that, okay, if there are more buyers, the price will go up, and if there are more sellers, the price will come down. So that is an example of a stock. Microsoft is a stock. You can see what I was explaining. For example, from this $7.560 billion, sorry, 7.560 billion units of shares, you can decide to have maybe a billion or few units. Most time people even have fraction of it. For example, maybe they have only 210 if the price is 420 to buy. So imagine you buy only that of 420 70 cents. That will give you 1 shares of Microsoft. So whatever they are sharing, that is your power. Whatever they are giving as dividends, it will come according to that size. So I hope this covers the explanation that Microsoft is a stock, and I just described what a stock is. Now, why do companies issue stocks? I've explained that briefly. Company issue stocks because they want to raise money. They want to raise capital, like I explained. Though I use a friend to explain that, but in a larger scale, company can say they are looking for billions of dollars. So when they are doing that, they approach the stock market, ensure they meet up the requirement, and after that, they list their companies based on the units they want to list, and based on the valuation, the worth of the share as at that time, they will now deliberate on it and see how they can list the price they will list. And when they are listing, it is available shares that they've created that they will float to the market, or they generate it and float it. So what they are saying is, after this is being floated in the market, they will have the equivalent in cash. So that is why when a company wants to delist, it has to use money to buy back those shares, because when you are listing, it is part of the condition. You cannot just delist without rewarding the investors who actually invested in your company. So that is how it is being designed, and that is how it works. So if company wants to generate money, and listing your company is actually interesting, and it helps the company in terms of publicity. A lot of people, most times, we come to know all this Apple because we are trading them. Even though there are some that we don't know, is because we are not trading them. As soon as you trade them, and they publicize their earnings, their report, so these things give them cheap publicity, not too cheap, so to speak. So it give them publicity for a lot of investors to also know that they are aware, because sometimes you see a company and you're like, what are they into? You go and do research, and from there you're fully aware. Imagine they are not listed on the stock exchange, you might not know them. So corporation issue stocks to raise money, just like I explained, for their businesses. So I also told you guys, for example, if you are developing or finding a new product line, they also need money to do research and development. They also want to invest for growth, like I told you guys, and also they may want to pay debt. So there's something we call commercial papers. Also, company use that to also pay debt, to look for funding, look for money to actually offset their debt, or to do some growth, to do some things that will ensure they experience growth in their company. So these are some key points that make company want to raise money. They want to find new product line, and they want to invest into research and development, and they also want to invest in growth, and they also want to pay off their debt. Now, types of stocks. So we have different kinds of stocks. So I'll explain the types of stock we have, so that by the time you go into the market, you can actually know the kind of stock that is available for me and you. Now we have preferred stocks and common stocks. So I'll give you some few details here. So important points to know. So preferred stock, if you are holding a preferred stock, you have no voting rights. But if you are holding a common stock, you have voting rights. So the stocks we are holding right now is common stocks. So we have voting Right. So last in line to get paid out in case of liquidation. So in case of company getting liquidated, the preferred stock or the preferred investor or the preferred stock, that's those that bought the preferred stock, will be the last to actually get paid when in case of liquidation. But last to get paid a dividend, that is for the common stock. So those that bought preferred stock, they get the dividends first, while those that bought common stock, they are the last to get a dividends. So you are actually buying common stocks when you buy stocks. So any stocks you're buying right now from New York Stock Exchange or from the Nigerian Stock Exchange, you are actually buying a common stock. So don't mind the name, it doesn't mean it's common for the fact that you're making money. So don't let that description to discourage you. So okay, so how are stocks categorized? I told you when I was analyzing Microsoft, I told you that stocks are being categorized into different area, which I'm going to show you right here. So we have, I told you how to calculate market cap, which I told you guys is shares outstanding multiplied by share price. And we have large cap. So typically hard to achieve massive growth due to size. So just like an elephant cannot run. So when you are buying stocks that are very, very large. So why are they interesting? If you are bringing huge money to the market, these are the stocks you want to consider because it will give you a balanced portfolio. So you don't have too much upside and you don't have too much downside. So you know that your money is actually safe and secure. Not safe and secure, so to speak, but it kind of stable because of the movement. So, and they also have proven track record over many years of frequently paying dividends. So you want to put it there, and every year you get your dividends. So for large cap, you want to ask what is the size. So for large cap, we are looking at $10 billion to $200 billion. So these are what we call large cap. So once the market capitalization is 10 billion or the market capitalization is 200 billion, we say this is a large cap. So mid cap, so not quite large, more established track record than small. Not quite large, they are not too large, so to speak. That's why it's mid cap, and they are more established track record than smaller cap. So often they are often the target of mergers and acquisition. So because they are mid cap, they can easily be you can easily buy them because of their unit. You can see the size is $2 billion to $10 billion. So because of that, you can easily buy them. So they can easily merge, and that's why we have mergers and acquisition. They can easily be merged or they can easily acquire companies like this. So that is what mid cap actually means. So you can see large cap is 10 billion to 200 billion, and mid cap is actually 2 billion to 10 billion. So let's look at small cap, typically younger and are seeking aggressive growth. So higher risks and don't usually offer dividends. So some of these penny stock, as is rightly called, but these are actually small cap, and they don't pay dividends, but they move very fast. You can actually make 100%, 50%. In fact, last time somebody I was showing how to trade actually make 200% from a particular stock. So that's massive. If you want to ask me, that is massive. So you can see how one can actually make good money from the market trading small cap. You can see 200 million, and these are the companies that will become 10, 20, 200 billion. So imagine you key in now and you have the patience to actually wait. Imagine what your money will be in some few years time after doing your research in knowing what to pick in this category. So that is small cap for you. So stocks are also being categorized. We talked about how stocks are categorized. We'll talk about the large cap, we'll talk about the mid cap, and we'll talk about the small cap. So we now come to stock categories. So in stock categories, how stocks are categorized. So we have growth stocks. So these are stocks with big potential for growth, and they can actually outperform the market. So we want to look at Nvidia, We want to look at Meta, which was formerly Facebook. We want to look at MSFT, which is Microsoft. So they're typically low or no dividends. So that is why we call them growth stock, because you're not getting anything from them. All what you're getting is price appreciation. For example, you bought Nvidia at 100 and the price now is $140. You will make 40% from that investment, but you won't get any dividend. So that is growth stocks. So in case you want to categorize stocks, we have growth stock and income stock. So growth stocks are stocks that actually appreciate in price. In fact, the reason you are buying them is the price appreciation. So we have income stock. So income stock, they don't move much, but they pay dividends. So you can see the category now. They don't move much, but they pay dividend. In fact, regular dividends. We have stocks that also pay monthly dividends. I have another course where I teach about dividends. Like, I teach everything you need to know about dividends. There are stocks that pay monthly dividends, and there are stocks that pays twice a year, which is interim and full year dividends, and there are stocks that pay 4 times, which is quarterly. So these payments will help you make consistent money. So you can actually be earning money every month if you invest in monthly dividends. You can imagine. That's why I told you the stock market is here to make you money. All you need to do is to pay attention and devote time to actually go through this. Ensure you have your notes and paper so that you're taking notes, and as you're taking notes, prepare the action points you are going to take along this line as we make progress together. Now, what is the third one? The third one is value stock. So value stock is perceived to be trading below its fundamentals, which is PE ratio or price to book ratio, typically seen as unfavorable in the marketplace. So now, when a stock is trading below its value, for example, if you know the value of Nvidia is supposed to be 150 and Nvidia is trading for $50, you want to rush it, because that will be a value stock. So you want to get in early and make money. Now, these are how to categorize this stock. So you ask yourself if it is in a large stock. If it's a large stock, you want to ask yourself if it is a growth, or if it is value, or if it is blend. So you want to mark it. So you come to mid cap. So that is the Morningstar style box that you can actually put which area the stocks belong to. So I hope you've been able to get the main purpose of this box. So if it is mid cap, it will be at the middle, and we have the value, we have the blend. If it is 2, you put it at the middle. If it is growth, you mark it here or you drop it here. So you have your style box to know actually what you are trading and how you're building up your portfolio so that you have a balanced portfolio. Now, we have sectors in terms of stocks. So you really need to know all this so that you understand how you're going to make money in the market, because you have price for everything you want to achieve in life. So the price of making money in the stock market is what you're doing right now. If you are watching this video and you are not tempted to leave it and go and watch another video on TikTok, or to go and watch another video on another place, pay attention. Finish what you've started. So we are almost close to the end. So stock sectors. So stocks are categorized into sectors. So these sectors will help you know trend, and you don't want to be selling mango when it is not time for mango and when people is asking for orange. So you want to look at the trend. For example, if you are watching this video in this time that I created this course, what is trending right now is AI. So if AI is trending, you don't want to go and buy Caterpillar. That will show that you are going against the trend. So you want to come to the sector of technology, you want to do research on AI, you want to do research on computing. So that is what you need to do. So let me show you the categories we have. So an area of the economy in which businesses share a product or services. There are 11 broad sectors, guys. 11. Can you imagine? We have 11. So let's go through them. We have the energy. So in the energy, we have the oil, we have the gas, we have the coal, we have the fuel, etc. There are a lot of them. In the material, we have chemicals, we have metals, we have paper. That is the material. So in the industrial, we have defense, we have aerospace, we have manufacturing. So that is what we have in the industrial. So in the consumer discretionary, we have apparel, we have household products, and the next one we have consumer staples. So we have foods, we have beverages, and we also have healthcare. So in healthcare, we have pharmaceutical, and we have healthcare equipment. So we have one, two, three, four, five, six. Then we have the financials, which is the banks and banking services. We also have the information technology. We have internet, we have software, we have semiconductor. We also have telecommunication services, which is AT&T, for example, and Verizon. We also have utilities, which is electricity, which is gas, which is water companies. We also have real estate, which we have REIT, that is real estate investment trust. We also have apartment, we have malls, we have office space. So these are the 11 sectors that you want to pay attention to. So in the times when there is bear market, every of these 11 cannot be bearish. There will always be a bullish market somewhere. So this video is just to broaden your mind for you to know that there are thousands of stocks that you can do research. And guess what? From these thousands, you can pick 1, 2, 3 that will change your life, guys. That will change the state of your financial portfolio, will change your portfolio, and your financial status will change in the society because you've made good money. So these are the areas that are there. I just explained to you that if I'm to look at this now, you want to pay attention to technology. Most especially, we are in this Trump era. You want to look at energy, you want to look at pharmaceutical, you want to look at crypto, you want to look at technology, you want to look at these areas, because these are the areas that, and you want to look at financial services also. These are the areas that the government, Trump government, will pay attention to, and you want to see how stocks from these sectors will be pumping. There are other ones that will not be focused also, that will still pump. That's why I'm giving you all the sectors so that you understand how the market works. So now, there are risks. Whatever you want to do in life comes with the risks. And I will tell you what is the most risky thing. The most risky thing is you cannot leave this earth alive. That is how it is. You cannot check out alive. That is the most risky thing. So if you are afraid of risks, know that every day of your life you take risks. If you're still going to your 9 to 5, know that when you want to enter the bus, you didn't ask the driver, or when you want to enter the taxi, you didn't ask the driver if they have driving license. You didn't ask them their years of experience. You didn't ask them all these questions. You just assume. An assumption is the least form of knowledge, but you assume that they've been driving for years, and you risk your life, your dear life that you love so much, and you balance. You are not even looking at the driver, you are pressing your phone, because you have this confidence, you have this boldness that the guy will take you to your destination. And congratulations, you got to your destination. And you've been doing this thing for years, 5 years, some of you 10 years, some of you 20 years. You jump in the morning, jump in the evening, jump in the morning, sometimes you forget to pray, you just hit the road, and God has been protecting you. All what I just want you to know is that singular act is risk. In case you are saying, anything that will be risky. The people that don't take risks, they are poor people. Poor people they see something, they say it's scam. You don't want to take my money. This is, and you ask them, how much do you have? They don't have money. They don't have much money. So anything they see, they say it's scam. They without doing research. But when you get to walk, jumping vehicle, they trust. They trust. Even when they go to a restaurant, they don't ask how the food is prepared and all that. They just trust the cook, and they say the food will be nice. So if you've been taking risks in all this area, how much more a risk that comes with a huge reward? A risk that will make you have time, that will make you have financial wealth, that will make you have rich network. You understand? There are a lot of things that comes when you start to trade stock. It's open your mind into a lot of things. and you make like-minded friends that discusses things concerning the market. So let me paint another scenario for you. Do you see those guys that walk on a tiny rope on a high level, like they put the rope and they walk, nothing is, just the rope? To you, that's very risky. But because they've been doing it for years, they've mastered it. It's just like they are walking on the road. But you, the observer, you think, man, oh man, these guys are crazy. But that is not how it works. If you to pay attention and devote time, you will do amazing things. What about those people that throw somersault and they roll and land on one tiny plank? Yeah. You think, wow. But you too can do the same. If you pay the price they've paid. It's all about recipe. So that's why I'm giving you this recipe, to let you know that when you hear risks, don't be afraid. By the time you understand the market, you will know that the risks is what you can consider. So that is what you need to know. So what is risks? So the chance that your actual outcome will differ from your expected outcome is number one. You might buy a stock hoping it will go up and it will go down. So that is why you need to set stop loss. So that's why I said everything is all about knowledge. So by the time you set stop loss, when it comes down to your stop loss, it will protect you. But the upside is always higher than the stop loss level, so that you're able to make good money when it goes your way. So that is how it works. So that is why if you are a giver, you want to have a limit, because the receiver does not have limit. So if you don't have a limit, very soon you become a receiver. So that is what you want to apply in your trade also. You want to ensure you have your stop loss. You want to know if this stock is down 5-10%, you create your principle. I sell off or I average down. So you want to work with that. So risks include the chance of losing some or all of your investment. So it's difficult to lose all of your investment if you're actually watching the stock market, if you are watching it, because it will not happen one day. It will not happen one day. In fact, I have a stock I bought, I think 2021. Stock actually went down. So luckily, I averaged down on that stock massively. Guess what? 2023, the stock started going up, and I made close to 500% from that investment. You see, patient, you see, time. So why do I have to wait that period? I've mastered it. I'm doing other trade. So once I make profit, I just dump it there. But I've learned my lesson. Why that thing happened to me is very important. It's very important. So these are the lessons that you'll be learning also, so that you will not make the same. So risk is equals to reward. So if it is a high risk, it's definitely going to be a high reward. So that is how it works. So if you are trading penny stocks, you know it's high risk, but the reward also is high. I just told you the movement of large cap, how they move. They move slowly, but penny, they move very fast. You can actually make 100, 200, 500% from penny stock. So the last one is, as investors, we are compensated for the level of risks we assume. That is just the truth. If you take a huge risk and it come out your way, you'll be hugely rewarded. Hugely. I meant it. Usually. I mean it. Usually. So guys, let's move to the next one. So types of risks. So there are different kinds of risks. For example, if tomorrow the whole world comes to an end, you won't blame anybody. Who will you accuse? And the whole market zero, no market, and you're in another world. It's part of risks. So that is why we need to know the different types of risks, so that as you're trading, you will know the risks you are taking and how to navigate through. So we have market risks. So economic development and other event liquidity. So market risks. So government can change a policy and everything. For example, banking. When government say banks should return some of their FS, We saw the market, people have started taking profit and all that. So in the US, you see when Facebook came out and said they are now Meta, the stock started shooting. It started going up. You look at other events also in the market. So we have liquidity risks also. What is liquidity risks? You buy a particular stock and now you can't sell because you didn't consider volume when you are going into the market. You can't sell because there is no much volume. So that's liquidity risks. We also have concentration risks also. So when you have too many eggs in one basket, concentration. So no advice. You just concentrate, buy everything, and you don't consider what if it dips, I should leave some and all that. You don't. And we also have credit risks. For example, you take a loan and you can't pay back. It's credit risks. So far, I think FGM bond, they had issue one time, but it was resolved and they pay back investors' money. So we also have inflation risks, loss of purchasing power. I actually put 20-30%, but the reality is we are like 34%. 34% inflation risks. We already have the horizon risks also, which is your investment time frame. It changes. You can say you want to hold this stock for 1 month. Before you know, you're holding for 3 months. Before you know, you're holding for 6 months. It happens. And we also have foreign investment risks. This applies to foreign investment. When you are investing outside the shore of your country, government policy, a lot of things can change. So these are the categories of risks that you have. Isn't this amazing that you're starting and you know what is ahead? It's amazing. You know what is ahead. You know what is ahead. So you'll be able to plan very well. Now, we have different types of equities. When we started, I told you, I want to teach you everything. And if you are watched to this stage, I think you're very serious. And I think you're able to make good money. I don't care how much you have. If you have 100 million, 100 billion, you can make it to 200 billion, even 900 billion. You can. And that is why the market is interesting. It is able to absorb the fund that you are bringing in. So we have individual stocks. So individual stocks are companies. For example, you are buying Dangote Sugar, you are buying PZ, you are buying Unilever, you know. So few shares as a way to dip your toe into the stock trading waters. You know, you can buy 1 or 2 shares, buy stocks and all that. So that is individual stocks, companies listed in the Nigerian Stock Exchange, in the US Stock Exchange. We also have mutual funds. So let you pool your money with other investors to mutually buy stocks, bonds, and other investments. So we have mutual funds. We also have index funds. So index fund aim to mirror the performance of benchmarks like the S&P 500 or the NGS 30 to mimic their makeup. So you want to get index fund to show up or to invest also. Then we have ETF. So ETF are exchange traded fund. They are exactly the name implies. So fund trade on exchange is generally tracking a specific index. So you can buy maybe 4, 5, 6, 10 companies and you give it a name. Maybe you just call it, maybe they are under technology, you say technology ETF, and we have different kinds of ETF. So I also have a video also that will teach you how to research ETF. So what to buy, either individual stocks, mutual funds, index fund, and ETFs. We also have REIT, which is real estate investment trust, and they allow individuals to invest in large scale income producing real estate, guys. Income producing real estate. So if you are investing in REIT, you are investing in income producing real estate. So you earn monthly dividends. If you are investing in this. So imagine you invest you invested $10,000 and the dividend is 10%. Imagine what you'll be getting. So that is a secret. You can use the stock market to pay yourself salary, and your neighbor will look like this guy is jobless, but he's getting money. They won't understand that your money is actually working for you, that you have employers that you've sent to rate to work. So they are working and you are the one collecting their salary. You understand? So that is what I just wanted you to know concerning rate. So rate, you can earn monthly dividends, and some are paying quarterly dividend, but most of them are paying monthly dividends. Now, individual stocks. What is the advantage? That is the pros and the cons. What is the advantage and disadvantage? What is the merit and demerit of trading individual stocks? So they have reduced or no fee. So when you are buying and selling, some stocks are actually free, while some, the fee are actually low. So no management fee to own. So if you're trading individual stocks, you're not paying any management to own. You are the one controlling your portfolio. You are the one buying and selling. You know what you are doing. So there is nothing like management fee. You also have complete control and understanding of what you own. So taxes are easy to manage, which is capital gain and capital loss. So that is the advantage. We also have disadvantage, which is hard to diversify. So need 20 to 100 to achieve adequate diversification. So more effort and time to monitor portfolio, to rebalancing, etc. And FOMO and emotion, fear of missing out. You'll be afraid you see profits, you say the thing will still go up and the next day it will come down. You see it down, you want to buy, you say, I don't know if it will continue to go down. Then after buying, it continues to go down. When you don't buy, it will go up. And you don't know that you are suffering from technical paralysis, technical analysis paralysis. That is what you are suffering from, because you are not doing your technical analysis. When it is at the point of entry, that's when you are selling. When it is at the point of selling, that's when you are buying. You're just doing the opposite. And after you say it's like the stock market is not for you, brothers and sisters, the stock market is for everybody. All you need is knowledge, and that is why you are here. So mutual fund also, so pools of money from the public to buy securities. So the advantage is liquid, is diversified, professional management, that is active versus passive. And we also have a lot of options. We have balanced, we have fixed income, we have money markets, and we have income. What are the disadvantages? Disadvantage is the fact that it comes with higher fees, comes with higher fees, and is not FDIC insured. And the large cash holding, you understand, and you need to have large cash before you can go in. Then hard to evaluate, so you can actually evaluate a mutual fund because it comprises of different stocks. So you can actually do individual analysis, you can do for mutual funds. So we also have index funds. So these are basket of stocks to mimic a certain market index. So what are the advantage? Low fees, outperform active management over time, easy to own, manage, invest in, and achieve goals. What are the disadvantage? Disadvantage is no control over holdings, lack of downside protection, not a hedge fund, and lack of different strategy. So let's move to the next. So ETFs, so basket of stocks to mimic a certain market sector that trade on an exchange. So what are the pros? Access to many stocks, low expense ratio, easy to own, manage, invest in, and achieve goals. Guys, what is the disadvantage of ETF? Disadvantage is actively managed ETF have higher fees, so you have to pay higher fees, lack of downside protection, not a hedge fund. Diversification is limited by focusing on one industry. I told you guys, if it is technology ETF, health ETF, it has to be in one industry. REIT, which is real estate investment trust, a company that owns, operates, or finance income producing real estate. So what are the pros? Access to a historical unaccessible asset class, and we also have it's liquid, you can buy and sell, stable cash flow through dividends, have to pay out 90% of income. That is the law. Historically sound asset class. So what are the disadvantages? Dividends are taxed as regular income. Yes, you will be taxed for your dividends. Subject to market risks and also economy downturn like 2018 can have high management fees. So that is what the rate is all about. So after you've known all this, you are already a stock trader, because I know after this you reach out to me to open your account. And if you have account already, great. So after you've know how the market operates, you know what is stocks, you know types of stock, categories, you know categories of sectors we have, the type of stocks we have, you know the risks we have, we know market cap, we know what is a stock. After you know all this, now what other things do you need to know? You need to know financial statement. This is what you want to use in evaluating these companies so that you will know when to buy, when to sell, and how to go about your trading. Yes, how to go about your trading. So that is where financial statement come to stay. So we have financial statement covers the fundamentals of stocks, while technical analysis cover the technical part of stocks. So the fundamental aspect is what we are looking at, financial statement. So how to evaluate a company. So where do this number come from? So I have a separate video where I also deal with all this. If you're interested in the course, you can check the link so that you will be able to reach out to me and let's discuss how you can get that also. So we have three parts that we analyze in terms of company analysis using fundamental approach. So we have the balance sheet, which is the snapshot of financials. So which is asset, which is equals to liability and shareholders equity. So we also have income statement, which is revenue, expenses during a specific period, either first quarter, second quarter, third quarter, or fourth quarter. We also have net income, which is then total revenue plus gains minus total expenses plus losses. We also have cash flow statement. So cash flow, cash inflow and cash outflow is what we are looking at. We are also looking at operation, which is business activities. We are looking at investing, which is property, plant and equipment, which is CapEx. Then we also have financing, which is cash flow between a biz and creditors 10K. Now we also have what we call financial ratio. This also gives you insight on how the company is doing. So you use these numbers to get the insight on how they are doing. So how do we evaluate a company? We look at the valuation, we look at the profitability, we look at the liquidity ratio, we look at the debt, which is like the solvency, then we look at the efficiency. So these are the 5 key areas we look in terms of financial ratio. So how do you evaluate a company? We evaluate using price to earning ratio, which is called a PE ratio. We also use the valuation ratio, which is price to earning ratio, which is equals to company share price to its EPS, which is earnings per share. So relative value of a company shares apple to apple. The formula is market value per share divided by earnings per share. Example for health, which is PE ratio should be 15 or lower. That is a healthy PE ratio. So thank you guys. This is Investor Joseph. You are trading people, not stocks. So I like to imagine what I wrote. This is thank to guys. You know what I meant there? It's typo. That place is supposed to be Y. So thank you guys. Thank you guys. Thank you guys. So you are trading people, not stock. So imagine when you see full offer, don't look at stock. If you want to be an expert, imagine it is people reaction. People reaction. That is what you want to look at. When you know that it is people reaction, that is how you're going to make money in the market. So just a recap. Let's see what we've done and let's see how far we've gone. Because I want you guys to know this once and for all. So we started here. I give you guys the 3 points. Savers are losers. Never been cheap to invest like today. And you are a guru. You don't have to be a genius for you to start trading. and make money. I told you stocks is the ownership of a company, and I also give you an example of Microsoft and how to calculate market cap, and also how to look at the share outstanding. We also ask why companies do issue shares or stock. These are some few reasons why they actually raise money: to fund a new product line, to research and for the research and development, invest in growth, pay off debt. So these are the reasons why. So we go to types of stock, we look at the preferred, and we look at the common. So we know that the common is what we buy and sell in the market. And how stocks are being categorized: they are categorized into large cap, mid cap, we also have small cap. Don't forget, we look at the number also, which is 10 billion to 200 billion for large cap. Mid cap is 2 billion to 10 billion. And we also look at small cap, which is 200 million to 2 billion. So we also look at stocks categories. So we look at growth stocks. We also look at income stocks. Then we look at value stocks. So these are the three categories of stocks. So we also look at the Morningstar style, which is large, mid, small, then growth, blend, value. So you need to put each of the box where they belong to based on what I just showed you. So we have stock sectors. We have 11 sectors. We have the energy, materials, industrial, consumer discretionary, consumer staples. We also have healthcare. We also have financials. We have information technology. We have telecommunication services. We have utilities. We have real estate investment, which is REIT. And we also have understanding risks, which I told you that the chance that your actual outcome will differ from your expected outcome is real. Risks include the chance of losing some or all of your investment, and also risk is equal to reward. So high risk, high reward; low risk, low reward. We also have, as investor, we are compensated for the level of risks we assume. And we have types of risks. We also have market risks. We also have liquidity risk. Market risks, anything can happen. We also have liquidity risks, you can't sell. We also have concentration risks, too many eggs in one basket. We have credit risks, entity can't actually repay. We have inflation risks, loss of purchasing power. We have horizon risks, your investment time frame changes. We also have foreign investment risks, applies to foreign investment. Then we have types of equities. So type of equities are individual stocks, mutual funds, index fund, ETFs, and we also have real estate investment trust. We also have the disadvantage of and advantage of individual stocks. We also have same for mutual funds. We have same for index fund, and we have same for ETFs also. Then we have same for real estate investment trust, and we also come to financial statement, which I told you is the fundamental analysis. That we have balance sheet, we have income statement, and we also have cash flow statement, and we also have financial ratio, which are valuation, profitability, liquidity, debt, and efficiency. So we also have price to earning ratio, and guys, we call it a day. But before we go, let me just congratulate you for spending time to watch this video. I want to appreciate you. You've actually invested in your knowledge, and now that you invest early, I'm very, very sure you're going to make massive progress. By the time this year ends, you'll be able to pinpoint what you've achieved in the market. So thank you for taking this course. I want to appreciate you for investing in yourself, and in a short while it's going to produce massive results that even you will regret why you've not taken this action 4-5 years ago. But like the Chinese proverb said, that the best time to plant a tree is 20 years ago, and the second best time is now. And thank God you've done that. And don't just watch and go. You need to take action. I always encourage you to start before you are ready. If you are ready before you start, it's already too late. So start before you are ready. Reach out to me. Let me create an account for you as soon as possible. Don't waste time. And as the account comes in, check your bank account. Whatever you have, dump it there and start trading. That will motivate you to actually make good money. So thank you for watching this video. I really appreciate you. Ensure you get another course so that you can build up on your knowledge. Bye. Peace out.